We are now recording. This is a Q&A session that is on 11/15/2022. Here we are with Triangle Blockchain Development. We have Eric Moore. Eric, go right ahead, please.
Okay, so yeah, Blair, let me know who has a question. I wanted to say something really quickly about that video. When I say that an allowed claim is a claim that's going to get paid, that's if the assets exceed liabilities. Because I re-listened to it and I said an allowed claims mean you're going to get paid. So you can have an allowed claim in a bankruptcy that doesn't have enough assets and you won't get paid. But in this particular case, we have more assets than liabilities. So an allowed claim, when I talked about the ESL allowed claim, you are getting paid on that particular claim. All right, I'll go ahead with the questions, Blair. Go ahead.
Okay, we have Ojo. Ojo, go ahead with your question, please.
Yeah, how are you doing, Mr. Moore?
Doing great, doing great.
Okay, thank you. Thank you for being on today. Just one quick question for those that are having stock in ComputerShare. It's new to me. I just want to know, is it only for stocks or does ComputerShare also do bonds? I'm new to that, so.
ComputerShare does everything, but that is a personal question about how your personal stock works, not a Sears related question. But ComputerShare does everything. They do everything. So you just have to call them. But you can't, you have to purchase your bonds, wherever you purchase, maybe E-Trade or somewhere like that.
Thank you.
Thank you, Ojo, for your question. Anyone here have a question pertaining to Sears? Here we have Theo. Theo, go right ahead, please. What's your question? That'll be Thomas. Theo?
Hey, can you hear me now?
Yeah, we can hear you now. Go right ahead with your question, sir.
My question is, while they're restructuring the payout, is there any point where they're going to freeze all assets to, to stop the destabilization of it? Meaning like the money is fluid, right? So imagine a pond. If I throw a rock in it, that money is moving like a wave moves, right? In order to get an accurate depiction of the value, I would have to freeze it at some point, correct?
No, there's no freeze. What happens is the effective date happened on October the 29th, and all the assets that were remaining of the debtors, which means all the businesses, Sears, Kmart, Innovative Solutions, Die Hard, Kenmore, Service Live, Craftsman by Sears, the 1,100 pieces of unencumbered real estate, and other businesses that we own. All of those assets and the cash moved to the liquidating trust. Has nothing to do with the stock. Sears Holdings has dissolved. Gotcha. Your interest is now in the liquidating trust. So Sears Holdings was our very rich uncle. He has died. All of his assets went into the probate. They've run the businesses he owns. The probate is over. And now we, as his beneficiaries, will be getting our pro rata share according to his will. And the will is document 1730, called the Asset Purchase Agreement and the APA, and the plan, which is document 3276, and the court order that approved it, document 5370-1. So there's no stock price. Forget that. You have a deceased uncle named Sears Holdings, and he's very wealthy, and he has businesses and assets that are left, and he had a will. And he had, in the last 4 years, we've technically been in a probate for a company. We've been liquidating. We've been paying off debts. So now they're going to pay off the remaining debts, and the beneficiaries, which we are, will be paid out of this estate called Sears Holdings. So the stock price, the stock doesn't trade anymore. There is no Sears Holdings company. There's a liquidating trust holding our assets and holding our cash.
Gotcha. Does the same apply for the bonds too? Like, will I just be able to purchase bonds indefinitely?
Well, let me say this again. So the assets of the company have moved to a liquidating trust. Okay?
Okay, I got
you.
The
fact that you can still purchase the debt for pennies on the dollar, knowing that there's enough money to pay 100 cents on the dollar, is a great opportunity. They absolutely won't be, because they're going to pay out on the bonds most likely before they pay out on the stock. Matter of fact, have you checked your email yet, Blair?
No, sir. Can we do that now?
Okay, when you get a chance, we're going to pull this document up. So I'm going to tell you the document and pull it up later, okay? Document 5370-1, page 69. Look under distribution record date. Again, document 5370-1, page 69, filed on October 15, 2019. It is the supplemental report and the supplemental, the amendment to the plan. And what it says is, for the avoidance of doubt, the distribution record date shall not apply to the debtor's publicly available securities, including the second lien notes, the second lien PIK notes, senior unsecured notes, 1995 unsecured SRAC, that's Sears Roebuck notes, 2002 unsecured SRAC notes. So, and the unsecured PIK notes, the holders of which shall receive a distribution in accordance with Article 4 of the plan. So, what happens is the money owed to the bondholders goes directly to the bond trustees. So the 2002 bonds have a different trustee that handles, or what they call an indentured trustee, okay? The SRAC notes, the 1995 bonds, those particular bonds have a separate trustee. So if you remember the notice that was shown in this video, it says the default has been withdrawn. And if Blair would, pull up the document with the highlights on it, Blair, document 5370-1. It says page 69. I think that was the first document I sent you. If you get a chance, I'm going to show people this actual document. So it's possible that the bonds pay first. And what I was explaining in that video that was so crucial is when they withdraw the default on a bond, the bond is no longer in default. So when you file bankruptcy, they can't pay interest on the bond. And in a lot of times, they don't know if you're going to get paid at all. So they file what's called a notice of default. The same way if you don't pay your mortgage for 3 months, you get a notice of default. I'm sure the guys, Roger, R1 and R2, are very familiar with real estate. So Blair, go to the last paragraph. Just blow it up to the last paragraph. This is document 5370-1, page 69. This is the order, amendment to the Chapter 11 plan. Now blow up to the last paragraph that's highlighted. It says distribution record date. Distribution record date. So it's possible that the bonds, and likely that the bonds will be paid before the stock. And because the default notice was withdrawn, and the screenshot we showed you, I got the notice on November the 2nd or November the 3rd. These bonds are no longer in default. That means they're going to get paid. They are no longer in default. E-Trade, SoFi, TD Ameritrade, they can't take a bond out of default. Only the bond indenture trustee can do it. And they only do it when the cash is in their hand to pay you. So that is what I'm trying to make sure everybody is understanding. The bonds are not in default anymore. The effective date has happened and the money to pay the bonds has transferred. People are paying no attention to Sears Holdings the way they pay no attention to any company they think is broke. Most of the people at E-Trade I spoke to do not know that Sears has even exited bankruptcy. They have no clue, no idea, because they don't pay attention to anything in bankruptcy. And that's why you find so many great opportunities, if you can find them, in bankruptcy, because nobody is there. And the so-called smart money and all the people on Wall Street and the top hedge funds, they don't play in this space. So you want to play in a space where other people are not, where you can take the information. You have a knowledge and an information edge. And all this is publicly available information. They're focused on the hot stock, what's gone up, what's doubled, what's tripled, what's up 20 and 30%. They're not paying attention to anything that has declined significantly in price. The bonds are down 95%. The stock is down 99%. But every once in a while, you can find incredible opportunities like Sears Holdings. So the default notice has been withdrawn. If you see this last paragraph in the highlights, I'll read it again. It says distribution record date. At the bottom, it says for the avoidance of doubt, the distribution record date shall not apply to the debtor's publicly traded securities, including the second lien notes, the second lien PIK notes, the senior unsecured notes. Those are the October 15, 2019 and October 15, 2049 bonds. The 1995 unsecured SRAC notes, the 2002 unsecured SRAC notes, the SRAC unsecured PIK notes, and the unsecured PIK notes, the holders of which shall receive a distribution in accordance with Article 4 of the plan, and, can't see it clear, at applicable customary procedures of the DTC on or as soon as practicable after the effective date. Now, they've withdrawn the default 3 days after the effective date. If there was no money to pay these bonds, why are they no longer in default? Why did they file a notice that the default has been withdrawn? So that is an incredible opportunity. Adrian has done an incredible video on how to purchase the bonds. The QSIP of these bonds, the cheapest bonds, is 812350. A as in Adrian, F as in Frank, and the number 3. Did I answer your question?
Yes.
All right. Sorry. On. Do me a favor. Cue up that second document. I'm going to, because everyone's going to need this information. But we can take another question while we wait.
Go ahead, motorcycle chick.
Hey, good evening, guys. Eric, hey, Adrian. Okay, now when you gave that QSIP number this time, the first time I was driving, and you gave it again just now, but it cut out. I copied the 81 and the AF3.
Okay, they'll have it on the screen for you. I want you to drive on it. It's 812 358. It's Adrian and the number, but it'll be in the chat and it's over the comment section of the two videos.
Okay, yep, I see it, and I have it as well. Thank you.
Okay, and the date is December 15, 2049. Go ahead. December 15, 2049. Either one. Same time.
Okay, you're cutting out on my end. I don't know if everybody else can hear you okay.
You're breaking up for some reason. Eh?
Put out on mine too.
Okay, got you. I'm sorry. Go ahead, guys.
Okay, and the other thing that I want to mention is that in that article that the gentlemen were talking about when they were the commentators, and they were kind of mocking and talking negatively about Sears. I don't know if you noticed the optics that they also had, not just the zombie, but at the very beginning, they at the very top, it had Sears ? Like what? ? Like it's a joke, you know?
Right.
And the joke is going to be on them. It was just
absolutely.
Yeah.
Absolutely.
Yeah.
And that this is further proof, motorcycle chick. It's further proof. And they did say there was 10,000 documents in the bankruptcy. I bet you they didn't read any one of them. Clearly.
That's obvious. Yeah. Yeah.
Clearly they didn't read any one of them. And they're still focused on the number of brick and mortar retail stores and not the holding company. And as Adrian said, they clearly know it's a holding company, but they don't believe anything else is there. And Warren Buffett had a company he purchased called Berkshire Hathaway. And it was the combination of two textile mills that were merged together in 1965. But back then, all the textile mills were closing. So from 1965 to 1985, they took the surplus money from their liquidation and they bought all these other businesses. They bought in about half a Geico. They bought Blue Chip Stamps. They bought See's Candy. They bought a bank in Pasadena called Wesco. They bought
real estate
other big company.
Real estate company.
No, they didn't. No, they didn't buy a real estate company, but they bought a lot of great value investments from 65 to 85. But they kept the name Berkshire Hathaway, with the exception that they formed a holding company. So it was actually Berkshire Hathaway Holdings, and people didn't even have any idea that they weren't just a textile company until around 85. So they went about 20 years, and nobody even looked to see what Berkshire Hathaway was doing, the same way we went 4 years into bankruptcy and nobody has looked. All of this stuff has been disclosed in the bankruptcy. And when you sell Inabel Solutions for $1 billion and you sell Die Hard for $200 million and you sell more than $750, $800 million worth of real estate and you still have plenty left, Nobody's paying attention. They just aren't. And it's great for us because we've been able to buy the stock and the bonds for pennies on the dollar. And even though the default notice has been withdrawn, we can still get the bonds for pennies on the dollar because of the disbelief that anything is there other than the retail business. And this is what's fascinating. It's disclosed in all of the annual reports. It's disclosed in all of the bankruptcy documents that our online business was doing close to $2 billion a year. Now, you're talking about $2 billion at roughly 25, 30% margins. What happens to the online business if the brick and mortar closes? Nothing. We just continue to make money. What happens to Kenmore? It's now sold in Costco, making tons of money. What happens to Service Live? What happens to Craftsman by Sears? So all of these other businesses and the real estate's being redeveloped. You look around the country, look at North Point Mall and the project they're working on there. Look at Santa Monica. Look in downtown LA. Look in Miami. Look in Times Square. Look in Long Island. Look in Big Bear. So we've got more than 5,000 acres of land, free and clear, no mortgages, no liens. So that didn't go anywhere. And it's all was disclosed in the bankruptcy. Document 892 discloses every piece of real estate we have. Document 1143, every piece of real estate with the address, and you can look up the tax values. Nobody is looking at this stuff. They simply believe Sears Holdings is Sears and Kmart retail. That's it. And it's great for us. It's an incredible opportunity for us, and I hope they keep missing it.
I know that's right. Me too. Thank you, Eric. Appreciate you.
Thank you.
This is the second document?
Yes, that's the second document. I'm going to read off of that real quick. Just blow up the highlighted portion for me, please, Blair. Okay, I'm going to address really quickly something that's being said online, mostly by Wyco Researcher, Elephant Analytics, guy named Stephen Baker Law on there. I'm going to address something really quickly. They say that shareholders are not a part of the liquidating trust. So I'm going to read you something out of document 5370-1, page 58. It's under corporate governance and dissolution. On the effective date, all liquidating trust assets of the debtors shall be transferred to the liquidating trust in accordance with Article 10 of the plan, and all debtors shall be dissolved without the necessity for any other or further action to be taken on or behalf of the such dissolving debtor or its shareholders, or any payments to be made in connection therewith. If there are no payments going to shareholders, why are they telling you you don't have to take any further action? What are they talking about? Why would you mention a shareholder at all? Any payments to be made in connection therewith. The remaining assets, after all debt is paid, goes to the shareholders. The bondholders get paid first because they are first in line, a priority. The bondholders have separate and what they call indenture trustees. So the bondholders have a trustee. The money that is owed to the bondholders is sent over to the indenture trustees. They send the notices to SoFi, E-Trade, Schwab, Robinhood, whoever, and they let people know these bonds are no longer in default. And they can only do that when the money to pay the bonds or replace the bond and pay the back interest is in their physical possession. It makes perfect sense. If you get a notice of default on your mortgage, they're not going to withdraw that notice of default until you pay your mortgage either in full or pay all the back payments. That's what it is. Now, Blair, do me a favor. Go to the next document. I'm going to show people a quick case study because I think people are missing that this is an ongoing opportunity. For those of us who have purchased the stock this year, last year, 2, 3, 4 years ago, 5 years ago, this is an ongoing opportunity because people are paying no attention. You want investments where you have the facts and everybody else has the rumors, they have the speculation, and they don't believe it's worth anything. You cannot get ultra wealthy. You can't get ultra rich if everybody believes something is valuable. By the time they believe it's valuable, you want to either be exiting or you want to be building your wealth as the company grows. You do not want to be purchasing when everybody else realizes it's valuable. You want to be purchasing now at pennies on the dollar when people are not paying any attention. Warren Buffett got super ultra wealthy when people thought Berkshire Hathaway was simply a textile mill and not a holding company. To this date, you cannot find any person who recommended Berkshire Hathaway from 1965 to 1990. No stockbroker, no hedge fund, no major investor of that time, because nobody was paying attention. So when I get the question, well, Eric, why are you the only person saying this? Because I'm the only person paying attention. And I'm not only the only person paying attention, I'm one of the only people with the expertise to actually understand what's happening. And it takes a lot of work, a lot of reading, and a lot of study. Full-time work for 4 years on Sears Holdings. I promise you, every detractor online has not spent 20 hours. They have not read these documents. They have not read document 5370-1 that I just read to you guys. Now, let me give you an example. Case study, 2013, JCPenney. Do me a favor, Blair, blow that up a little bit bigger. This is what happened in the JCPenney case in 2013. A little bit bigger, Blair, so I can get the highlights and the cover. What they said in this article, you guys can Google it. Bondholders withdraw claim Penny was in default on bond terms. From Reuters.
P,
Yes.
that's the biggest it gets.
Okay, that's fine. That's fine. As long as people can see it. All right, so bondholders withdraw claim Penny was in default on bond terms. Thank you, Blair. JCPenney, Inc., JCP.N bondholders, who last month claimed the retailer had breached a covenant of a bond indenture, withdrew and rescinded their notice of default on March 18th. The company said in the regulatory filing on Wednesday. Scroll down to the other highlight, and it says, the withdrawal of the notice of default is a break for Penny at a time concerns are high the chain could face a cash crunch after it reported a 31.7% decline in same-store sales during the fourth quarter. Now, this is an example. There was a lawsuit with the bondholders, and they sued and said, hey, you guys are in default. They worked out a settlement. They said, we're not in default, so they withdrew the notice of default. The bondholders continued to get paid for the next 6, 7, 8 years until Penny actually went into bankruptcy 7, 8 years later, which was about 2020. Now, when they withdraw the notice of default, your interest payments are paid and or the principal is paid. In this case, these bonds have expired as of October 15, 2019. If they did not have the money to pay the back interest, which is 4 years of interest, plus the principal, they would not withdraw the notice of default. When you file bankruptcy, all bonds are in default because they can't pay interest during bankruptcy, guys. That's the whole purpose of bankruptcy. It's called bankruptcy protection. And you're being protected from your creditors. We as bondholders are creditors. We as stockholders are creditors. Bonds are first in line. Stock is last in line. Secured bonds and secured creditors are first. So it's just like if you own a house, you have a first lien on your house and a second mortgage or a HELOC. But the first mortgage, it of course has priority. So even though our bonds are unsecured, clearly there is enough cash to pay them off because you don't withdraw the notice of default after a bankruptcy 3 days after the effective date unless you have the money. And if you go to the document Blair put up, and you don't have to go back, Blair, you go under distribution record date, and that is document 5370-1, page 69. They're making it clear that the bonds get paid separately from the liquidating trust, directly from the bond indenture trustees. And that money has to be sitting, waiting to be paid to us, because there is no way they sent E-Trade a notice telling them these bonds are no longer in default unless they have the money in their hands. Okay, thank you, Blair. We can take some more questions.
Okay, everyone. Thanks, E. Ojo, you got your hand raised again. Go ahead with your question.
Okay, thank you, Eric, for the information. I know you said this is an ongoing process with Sears. Just one thing came to mind. After everything is liquidated and all the investors are paid out, I noticed that I think last year, when it was getting closer to December, they waited until I think after the tax season do you think it's possible they may do it again? I'm just looking at the taxes in terms of what they're doing, and I think that's the last time I think they wait until after January. I'm just wondering if you feel that they may do it again.
I
It
don't know
actually
what you
doesn't
mean by
matter when they. Oh, okay, I'm sorry. Go
no,
ahead.
no, it does matter. I'm sorry. Go ahead.
I think the last time I'm not sure if it was January or February, but I
What?
think they wait.
Well, that was pre-effective date. I didn't mean to interrupt you. We are
Okay,
past the effective date. So now the assets and cash, the remaining assets of the debtors, the cash, the businesses, that has been the cash, I'm sorry, has been transferred to the liquidating trust, okay? Including our rights and interests under the asset purchase agreement, which is document 1730. We could get one payment or we can get multiple payments over a course of months or years. We could get a payment of $10 or $20 2 weeks from now, 3 weeks from now, and we can get another payment in January, February. We can get another payment in September. Or they can just make a big announcement and give us all the money at one time. They have the authority. And if you look at the same document, document 5370-1, page 69, they actually say they have to make at least one payment per year, meaning they could make one big payment this year. They could say, here's $50 cash. Next year, sometime, we're going to give you some more liquidating proceeds. That could happen. So I'm not sure how that's going to work, but normally they set up a website for the liquidating trust. They file the assets of the liquidating trust. You get what they call liquidating trust certificates. All of this stuff happens. I was a part of the Washington Mutual, WMIH liquidating trust in that bankruptcy, which became the company Mr. Cooper after their merger. And that's how they set it up. So you'll be able to go to the website. You'll be able to see what's there. It'll be an announcement, all that good stuff. And we do have a court date coming up November the 17th. It's a status report, and perhaps some of that information will be disclosed. Perhaps it will not. But the liquidating trust is called SRZ Liquidating Trust. SRZ, Z as in zebra, Liquidating Trust. And that information, they'll normally have a website, so on and so forth. But our assets and our cash, our businesses are now in that liquidating trust. There is no Sears Holdings. There is no Sears Holdings. It's been dissolved. And that was a large part of what we were waiting on. You look at document 1730, page 32, there was a distribution requirement and a dissolution requirement. The dissolution requirement has been met, and now the distribution to us is the next requirement that has to be made. So it's better for us on a tax basis if we got some now and some next year, but I'm not sure how it's going to work.
okay, thank you. Actually, you answered my question. Because I was wondering if they may do it part now and part later, because I think that would make a little bit more sense based upon like the tax season. So I just wanted to know your thoughts on that. So thank you.
Right, but the bonds, they can't do that with the bonds. The bonds are going to get paid all now or all later in most cases. I don't think they can do that with the bonds because the bond indenture trustee has a fiduciary duty to pay when the money is there. And because the bonds are expired, the 2018 bonds, the 2019 bonds, I believe they have to pay all now. And I'm not sure, but I believe they do. But we'll see later.
Thank you, Eric. Appreciate it.
Thank you.
Thank you, Ojo, for your question and concerns. Do we have anybody else with a question? Raise your hand, please. Anybody? While we got the man here, Jason, go ahead with your question, sir. Jason, you got to unmute yourself, sir. There you go.
First things first, huh? I guess.
Absolutely. Go ahead with your question.
Yeah,
Right.
thank you. So what was the term that you used during this pre-recorded thing that said something along the lines of liquidating, for the taxes stuff, like liquidated, and you were going to do something later on with it, liquidating cash payment or something along those lines?
Liquidating dividend.
Oh, liquidating dividend. Okay, I didn't write it down, so thank you.
No problem.
That's what. So I'm writing it down.
That's what it's called for tax purposes. It's called a liquidating dividend,
Okay.
and it's taxed at the capital gains rate and not at the income tax rate.
Okay, yeah, I know that I didn't want to delve into like something quote unquote personal, rather than that, but I wanted to get that terminology because I know it's important. So thank you very much.
Okay, no problem. Thank you.
Thank you, Jace. Anybody have a question for the man, the myth, the legend? We got him right here. Anybody got a question for Eric? Anybody got a question about the video? Sears? Anybody? Okay. Well, E, what do you have to say? Anything else that you want to say? What we should look
Yes.
for next? Go right ahead,
Yes.
sir.
Okay, so this is what we'll do. I'm curious to know if everybody here is still buying bonds or not. I'm just curious to see. I know a few of us are. How many people are still buying bonds? And if you're not still buying bonds, I'd be curious as to know why you're not.
Show of hands. Show of hands, everybody. Who's still buying bonds? Hey, oh, everything lit up like a Christmas tree. There we go.
Okay, all right. So I think we're getting it. I think we're getting it. Yeah, because all right, so that's interesting. All right, because what I'm waiting on, what I think Wall Street is waiting on. Thank you, everybody. What I think Wall Street is waiting on, and I've heard this from a lot of people on Wall Street, some people, that, are handling, 10, 20, 40, 50, 2, 3, 4, $500 million. They're waiting on Bloomberg. And I think some of you are familiar with the Bloomberg terminal, Bloomberg terminal is like a database. It gives you all this information on the stocks and what's going on and updates and information and everything. And most stockbrokers and hedge fund people have a Bloomberg terminal on their desk. And they're waiting on CNBC, or they're waiting on Bloomberg television station. They're waiting on the Wall Street Journal to tell people that the bonds are no longer in default and you can make some money. The great opportunities come from publicly available information that people are not paying attention to. And I've never seen a situation like Sears Holdings where the negativity is so huge that people don't even pay attention to what's happening. And you find great opportunities at great pessimism. You're not looking for a company that everybody is excited about. You're looking for a quality company in a great situation that people are overlooking, have already purchased. Maybe it's declined. Maybe they're doing a transformation like Sears Holdings. Maybe it's a holding company that has multiple businesses and they're just focused on one or two. Because if you think about it, and Adrian made this clear a while ago, Adrian was saying that there's certain words that trigger that people are going to either lose their money or they're about to lose their money. And when they hear a company is liquidating, like Seritage, which is SRG, when they hear a company is, quote, losing money, when they hear a company is closing stores, when they hear a company is headed into bankruptcy, most people don't look further. They simply say, I got to get out. I'm about to lose my money. So in this particular situation, we have all of the above. We had, quote, we were losing money on a GAAP basis. We were liquidating. We filed bankruptcy Chapter 11. So all of these things make people stop looking. That does not mean that there is value, the value isn't there. It does not mean that we don't have unencumbered assets now. It does not mean anything. It simply means that the people on Wall Street are not looking. And the question I get the most is, how are you seeing this and no one else is? And I just assure you that nobody else is looking. If you talk to anyone on Wall Street about Sears Holdings and say, name two businesses they own other than Sears and Kmart, and most can't name one. Most people didn't know that we owned Innovel Solutions, which we sold to Costco for $1 billion. It had no debt. Most people don't know we own Craftsman by Sears. We own Die Hard, which we sold for $200 million. Most people don't know that we own more than 5,000 acres of land that are free and clear and unencumbered. And as you can see from the video that we showed, the people who are talking about our exit from bankruptcy are simply talking about how many remaining retail stores. They call the real estate zombie real estate. Well, I want to know how 5,000 acres of land in areas where the income is 95,000 and up is zombie. That doesn't sound like an area that isn't high end to me. The North Point Mall in Alpharetta, Georgia, where they're working on a redevelopment there. $500 million redevelopment is what was proposed just 2 weeks ago. We own about 10 acres and a Sears store that has to be a part of the redevelopment. Those are not zombie properties. So what is the incentive? Because these people are supposed to be journalists. Why is a journalist saying this information without reading the actual facts of the document? Who cares? It creates an opportunity for us. And what I want to what I want to talk to everybody about is to make sure you're aware that it's an ongoing opportunity. We're not just sitting around waiting for a stock payout. The bonds are selling for literally pennies on the dollar. And the particular bonds, the October 15, 2049 bonds, are selling for between 1 and 1.5 cents, 1 3/4, almost less than 2 cents on the dollar. And they've withdrawn the default notice. I don't know how to say how incredible that is, but the example I gave before was it's like somebody walks up on you with a winning $1,000 lottery ticket, and they offer to sell it to you for $10. You wouldn't buy one. You would say, how many more do you have? If he said, oh, I'll have about 20 more tomorrow, you wouldn't say, oh, maybe I'll catch you another time. No, you would show up the next day, and you would pay him the $10 for the $1,000. So the highest form of investing is investing with certainty. You want to invest when you know you can't lose mathematically. It's not about emotion. It's about the math. And you want to be investing in something that is already worth multiples of what you're paying. I assure you this will go down in history as one of the most incredible, misunderstood, overlooked investments of all time. And people are going to be talking about it on television, on CNBC, on Bloomberg. It's going to be in books. And people are going to say, I can't believe people were so negative that they would not buy the bonds for pennies on the dollar, even when the default notice was withdrawn. Now, if you call some of these brokers, they will say they don't know what that means. So how do you not know what a default notice withdrawing means, but you know what a notice of default is? A notice of default tells you that the bonds will no longer be paying interest because the company's in bankruptcy or some other reason. So if they default and file a notice of default, if they're in bankruptcy, clearly, if they don't have the money, they wouldn't withdraw that notice. I think that's pretty common sense. But if you talk to people, they're so negative at these brokers because when you tell them you're calling about Sears Holdings, oh no, I just no way it's any money available for Sears. That's kind of what my experience has been. Now, I did call one guy a few weeks ago, and he immediately said, oh yeah, if they withdrew the default notice, you're getting paid. This does not come from E-Trade. It does not come from the brokers. It comes from the bond indenture trustee or from the DTC. So they cannot withdraw this notice unless the money is in their hand. The liability would be incredible. So when the money is in their hand to pay the bonds off, they withdraw the default notice to make everybody aware that the bonds are no longer in default. So we're doing the right thing. It's an incredible opportunity. It's going to be documented that we had this opportunity. And you want to make sure that you're paying attention to the facts. And as Adrian said, and Blair said, and Rod said, I'm giving you the actual facts from the court record. And I, again, invite Elephant Analytics, Wyco Researchers, Stephen Baker Law. My biggest detractors can join us at any time on any live Zoom, anytime. I've been inviting them for more than 3 years to do a conference call on a Zoom, and none of them have showed up. And the challenge about the people who say this information is wrong is I don't see how they can refute the court orders, the court transcripts, the plan, document 5370. If you are so sure that this information is incorrect, come to the call. So I call them out every time we have it. Wyco Researcher has been writing articles. He said we will be wiped out on the effective date. We have not been. He said that there would be no change in stock symbol. We're simply wiped out. And if you go to SoFi, it says SHLDQ-reorg. If you go to E-Trade, they give you the QSIP number. And I assure you that Mr. Lampert has an amazing, incredible plan that he has executed. And I assure you that he would not have risked this much money and this much time to lose. His track record is impeccable. He's one of the best and greatest investors of all time. Him and I, Eddie Lampert and I, had a discussion at the annual meeting, the last annual meeting in front of the entire company. We discussed the transformation that he was talking about. We discussed what happened with Berkshire Hathaway and their a reorganization, when they merged blue chip stamps, when they merged diversified retailing, we talked about the fact that Sears Holdings was looking like Berkshire Hathaway in its infancy as a holding company, as a dying company that had other valuable parts, but we had to liquidate the parts that were, quote, dying so that the other parts can survive. It's, cutting off a couple of fingers to get rid of the cancer, so to speak, so the rest of your body can survive. So if you cut off your pinky finger and it's got cancer and you remove the cancer, you're going to survive and you're going to most likely thrive. So we don't want to throw a person away because they got cancer in the top tip of their pinky finger. You cut that part off, you're healthy, and you move forward. So it's an incredible opportunity. I never thought I would see one like this, and it's still an ongoing opportunity. And that's what I want to make clear to everybody. This is an ongoing opportunity. As long as those bonds are available for pennies on the dollar, I would continue to purchase. That's what I'm doing. Not investment advice. I'm not a financial advisor, as all of you know. I'm not an attorney. But that's what I'm doing, and that's what my group is doing. Any more questions, Claire?
Anybody? Any more questions?
Any comments?
Any comments? I have one comment myself I'd like to make. After this, I'll no longer be known as Blair. I'll be known as Papa Escrow. So I just want to go on record and say that. Don't pay me no mind. If anybody have a question, go ahead and raise their hand. The books, E, could you please go over the book titles one more time? It was Intelligent Investor, Fortune's Formula, and the other one was, there was two more.
Okay, so the books, the book by Jordan, I think it's Elderberg. It was called How Not to Be Wrong. The Power of Mathematical Thinking, How Not to Be Wrong.
There we go.
And read the chapter on the people who won the lottery every week for about 3 years. Read that chapter, and it will give you a good understanding of what we're doing with the bonds. Read the chapter on the people who won the lottery. It was a group of MIT students and another mathematician. They won the lottery for 2, 3, or 4 years straight. It's How Not to Be Wrong with Math. I think it's Jordan Elderberg or something like that. Somebody correct me or put it in the chat. Of course, the book, The Intelligent Investor, chapters 8 and 20 by Benjamin Graham, Warren Buffett's professor. And I also want people to read chapter 21 of Warren Buffett's book, The Snowball, and you'll see the type of liquidation that we're doing. It's covered in chapter 21 of The Snowball, Warren Buffett and the Business of Life. It's a very thick book. I read the book in its entirety, looked up every footnote, and a lot of what's happening at Sears Holdings, Warren Buffett did it. He was a part of an investment called Rockwood Chocolate in 1955. It's chapter 21 of The Snowball, the book Warren Buffett and the Business of Life. And there's another book that will teach you about why people are missing Sears Holdings and why people do what they do in markets and in purchasing. And that book is called Influence by Robert B. Cialdini, Cialdini. Robert B. Cialdini. Robert B. Cialdini. The book is called Influence, Science and Practice. Incredible book on the psychology of why people pay more for something if it's expensive. The psychology of some of the tests they did. They took 2 glasses of wine. They wrote $100 on one bottle and $5 on the other. And they had people drink this wine. When the people thought the wine was the $5 wine, they didn't get the neurons in their brain. They hooked up something to their brain. When they thought they were drinking $100 wine, the part of their brain that registers pleasure and endorphins, etc., they came in. So even though it was the same wine, the fact that they thought it was more expensive, they thought it tasted better. That's an incredible book, and they have lots of examples that'll give you a good understanding of why no matter what facts you show people about Sears Holdings, they can't see it because the price went down 99%. Anything of value will have a high price. Anything that doesn't have value will have a low price. And some people can't get past those biases. The same way people think good wine is expensive. So even though they drank the exact same glass of wine, when they saw that the price was $100, their brains registered better taste. So it's actually psychological, but it was actually able to show up on a brain scan that they felt like it should taste better. So it did actually taste better to their brains. These are the type of books and understandings it takes so you don't get caught up in trying to figure out why people don't get it, even though the facts are there. And like Adrian said as well, you have to be able to get away from the herd and get to the facts. And Bruce Berkowitz has a saying. He owns Fairhome Fund, large investor in Sears Holdings. He said, ignore the crowd. And that's the key. You must be able to ignore the crowd. It's very difficult. And most of you think you're independent thinkers. As you can see, it doesn't matter what facts you show people. They want to be in a crowd. So you can put the crowd is always in the popular investments. And it's very difficult to be somewhere and you tell people you're invested in Sears Holdings and they laugh at you and say, you mean the broke retailer? So most people want acceptance from the crowd. So you have to focus on the math and focus on the facts. And I assure you, Eddie Lampert will go down in history as the greatest investor of our time, the greatest investor and the greatest CEO of our time. So another book you want to read, if you can get your hands on it, give you a good understanding of value investing. This book is from the 70s. It's by a guy named Ray Dirks. Incredible guy. The book is called The Dirks Investment Formula. Heads you win, tails you win. Heads you win, tails you win by Ray Dirks, D-I-R-K-S. The Dirks Investment Formula. And he talks about buying low PE stocks, low book to value, and high earnings per share. Incredible books. The first book I would read chapter 8 and chapter 20 of The Intelligent Investor, and you have to master those chapters. If you can't deal with price fluctuations and understanding the difference between value and price, they are not always the same. We're looking for mispricings. That's how you make money. You are not looking to purchase something that is popular and or overvalued. A stock is simply a fractional piece of a business. So you have to know how to value that, and you want to learn how to value companies. There's another book that's a little more advanced that you read afterwards called The Quality of Earnings. And it talks to you about how to look at whether a company has quality earnings, because you can have earnings from all one big customer. 99% of your revenue could be coming from one customer, and you just show a whole lot of revenue. You lose that one customer, the company might be in bankruptcy. So the book is called Quality of Earnings by Thornton L. O'Glove. Quality of Earnings, Thornton L. O'Glove. Look up a YouTube video where he gives a presentation on his book. Quality of Earnings, Thornton L. O'Glove, O-G-L-O-V-E. Thornton spelled T-H-O-R-N-T-O-N. And you're going to have to learn how to value a company if you want to get rich or wealthy and investing. You can't get rich or wealthy investing buying what everybody else is buying when it's popular. It's just not mathematically possible. Another book from the 80s called The Phoenix Approach. It talks about how to invest in bankrupt companies by William J. Grace Jr. He gives 6 or 7 case studies of companies people thought were going into bankruptcy or companies that went into bankruptcy, including Toys R Us, Geico, and some others. It's called The Phoenix Approach by William J. Grace Jr. William J. Grace Jr., The Phoenix Approach. So those are probably the best books, with The Intelligent Investor being first, chapter 8 and chapter 20, How Not to Be Wrong with Math. I would read the chapter, I read the whole book, but read the chapter on the people who won the lottery for 3 or 4 years straight. 3 or 4 years straight, and with no risk. Absolutely incredible. And it's exactly what we're doing with the bonds. Exactly what we're doing with the bonds. All right. Any more questions? Any more comments? Okay, go ahead.
Adrian got a hand raised. Go ahead.
I just have a comment, and I'm sure it's apparent to other people on the call. Man, nobody researches like you. You just rattled off like 5, 6, 7, 8 books so people can start getting a background. Just want to just point out that I think that's amazing. And you know, I'm a big fan of the movie Talladega Nights. And so any of you are also, you'll recognize this compliment I'm going to give Eric. Nobody can hang with your stuff. You are just a big American winning machine, sir. Thank you.
Well, thank you. Hopefully my head won't get too big.
Absolutely. Absolutely. I couldn't agree with you more, Adrian. I couldn't agree with you more. Absolutely. Anybody, while we got the mastermind here, while we got the brilliant man that knows all of this stuff like the back of his hand, anybody got a question?
Thank you, Eric, for the information. Great stuff.
Thank you, Miss Marva.
You're welcome.
Are we going to conclude for tonight? Are we going to stop recording now?
Let me say one more thing. We can stop recording. There's a video online that Jordan Elderberg did that I want everybody to watch, and you'll see what we're doing with the bonds. He did a presentation on his book, and he spoke about the people who were winning the lottery for 3 or 4 years. I think the title of the video is, Can You Get Rich Playing the Lottery? His name is Jordan. I think it's Elderberg. Somebody look that up for me, because I don't know why I can't remember his name. But it's Can You Get Rich Playing the Lottery? And it's him giving a presentation at a university, and he's explaining exactly how investing works when you want to get rich without taking risk. These people did not play the lottery until the odds were in their favor. And certain weeks, the lottery, let me just say this real quick, Blair, then I'm going to let everybody go. But look up this video if we can, Blair. Let's put it in the chat of let's put it in the chat of the YouTube video. Here's the concept. So they had a $2 billion lottery on the Powerball. I think the drawing was last week. In Massachusetts and or New Hampshire, when the lottery, one of the games, when the lottery got really, really big, people wouldn't play it, the state lottery. So what they would do is they would take some of the winnings and roll it down to the smaller portions. So let's say you had to have 7 numbers to win. If nobody won in week 1, they would roll some of that jackpot down to the people who had only 5 numbers, or down to the people who only had 3 numbers, and down to the people who had the 3-digit number and the 4-digit. So you could actually mathematically look and see what weeks that a $2 lottery ticket was actually worth, what they call expected value of math. It was actually worth $5. So the odds of you losing, the odds were actually in your favor on the roll down weeks, because that much money rolled down. The highest level of investing is investing when you cannot lose, investing with no risk. I know that sounds crazy. I need you to watch the video, get the book, and read the chapter. But if you watch the video, it's only about an hour. It's an absolutely perfect example of what I do with investing. We do not invest when we see there is a chance to lose. Warren Buffett, Professor Benjamin Graham calls it the margin of safety, but it's beyond the margin of safety. It's almost like what I call collateral investing instead of somebody mute out. Collateral investing instead of value investing, because you're technically, and Adrian and I had this conversation, we're looking for the return a venture capitalist or a private equity person gets with the risk of a secured banker. We want the risk of a secured banker, but the returns of a value, with the returns of a private equity or a venture capitalist. That's what we're looking for. We're not looking to roll the dice. We're not looking to gamble. We're not looking to put money up in hopes. Had to cough a little bit. We're not looking to put money up in hopes we can get a return. We're looking to put in $20, knowing there's $50 in assets, cash, etc., already at the company. So the people who won this lottery, and you'll see this and I hope we put this in the chat and put this in the chat of the recorded video. The people who won week after week after week, they were literally buying 60, 70% of the lottery tickets every time on the roll down weeks, because the math made sense. They didn't play. They simply did not play lottery unless the money was rolled down. Because if the money is not rolled down, the average $2 ticket had an expected value of 80 cents. Let me say that again. On the non-roll down weeks, you buy a $2 ticket and the expected value is 80 cents. They played when you buy a $2 ticket and the expected value was $5, $5.50, $6. You could buy 1,000 tickets and the odds were in your favor. They did this literally for 3 or 4 years until they shut the game down. They tried to make it seem like they were doing something illegal. No, they only played when the odds were in their favor. And that's what we're doing with the bonds. The odds are in our favor. The math is in our favor. That's the key. So you want to understand that is what investing is. Most people don't understand that investing and gambling are at two different opposite ends of the spectrum. Gambling is guessing, hoping, wishing, praying. Investing is to invest. You're putting something in that is already vested. When your pension is vested, it's already there. You don't want to speculate on that. Nothing wrong with speculation. Gambling is legal. You can gamble on sports. But if you learn value investing, you won't speculate or gamble ever again in your life. If you can develop the patience and you can develop the temperament, it has nothing to do with complicated math. It has to do with having the temperament and the patience to stand against the crowd, the naysayers online, the negative talkers. You have to focus on the math. If you focus on the math, I assure you, you don't let the emotion and everything else going on around jade you from the math. The math at Sears Holdings makes sense. The math with the bonds makes sense. The actual facts in the court record trump any report you can get, any comment from these anonymous people online. So that's what's important. And you have to do the reading and studying so you get an understanding of where your blind spots are. And you don't even know when you're drinking this wine that's a $5 wine because they showed you that it cost $100. And your brain is literally telling you to feel pleasure. It's telling you this is expensive, it must taste good. And your brain is reacting to it because you've been programmed to believe high price means high value. And you've been programmed to believe low price means low value. So of course Sears Holdings is worthless. Of course these bonds that are, quote, were in default are worthless. Of course bonds that sell for pennies on the dollar are worthless. So it's the psychological part and the temperament that it takes that very few people have. Being able to watch the price fluctuate, but you understand what it's actually worth. Very few people can do it. It's simple, but it's not easy. Any more questions?
Anybody? Any more questions? Adrian, thank you so much for listing the information in the chat window. That's perfect. I'm bookmarking and everything in the background. Thank you so much for that. And Eric, I did post that video underneath that 11/11/22 video on YouTube. I just posted in the comments there.
Okay, great. And definitely put it under this video when it posts as well. It's absolutely the best video on investing you ever watch, and it's on the lottery. It's on the lottery.
All right. Will do.
Hey, Blair.
Yes, sir.
I posted the books in the chat room. Just want to let you know.
Okay, great. Okay, cool. And yeah, Adrian has the books, the links to them on Amazon. She has all of that right there too, right? Thank you very much. Okay.
All right. Thank you.
Yeah, anybody else have any questions? Are we going to conclude right now for tonight? We're going to stop recording? We can stop recording, yes?
That's fine, Blair.
Okay. Righty.